Hey, what's up guys? Welcome back to the channel. My name's Frank Mularcik and welcome to episode 22 of my Dow Analysis series. In this video, we'll be analyzing the 10th largest company in the Dow by market cap, which is Home Depot, ticker symbol HD. Home Depot is currently the world's largest home improvement retailer. They do sell a variety of products including building materials, home improvement products, lawn and garden products, decor products, and facilities, maintenance, repair, and operations products. They also offer some services such as home improvement installation services and tool and equipment rental. They are mostly based in North America with 2,317 stores throughout North America, 2,005 of which are in the United States. And about 92% of their sales come from the United States and United States territories, and the remaining 8% of sales come outside of the United States, which is mainly just Canada and Mexico. Just a few weeks ago, on August 16th, Home Depot announced their second quarter earnings, and earnings were very strong. Just to note, their fiscal year goes from February 1st to January 31st, meaning their second quarter is from the beginning of May to the end of July. So they reported sales for that quarter of $43.8 billion, which was an increase of 6.5% from the second quarter of 2021, and net earnings were $5.2 billion or $5.05 per share, which was an 11.5% increase from the second quarter of last year, which really is incredible. Usually the second quarter is their best quarter because of the spring and summer season, May, June, July. Lots of people doing lots of things to improve their homes. But when you see double-digit earnings growth year over year, that is really awesome to see. And they also reaffirmed some guidance. So for the full year of 2022, they're expecting sales growth of about 3% and earnings per share growth in the mid-single-digit range. That's as specific as they got. So something I did hear on the earnings call, which I thought was pretty interesting, was something that the Chief Operating Officer, Ted Decker, said. And he said, and I quote, "The strongest and most correlated for our sales is home price appreciation." And what he was saying by this is that of various macroeconomic factors, home prices are one of the ones that are correlated and most affect Home Depot's sales. And he also said that even if home prices, stagnate for a few years, that's really not going to affect their business that much because of people's aging homes and they need to do renovations and updates and stuff like that. But personally, I think if we see some sort of a more serious recession and we see home prices continue to fall, or I guess start to fall and fall drastically, then I think that could definitely hurt Home Depot's sales for the next few years. But like I said, I just think that's could be an issue for the next few years. I don't think it's really going to have a long-term effect on the business. So for the quarter, earnings were very strong, but I think we could be a little bit cautious about Home Depot going forward. And looking at the balance sheet now, we can see that cash is down substantially from the end of the second quarter last year to $1.3 billion, and current assets, however, are up substantially to $32.9 billion, which was mainly driven by an increase in inventories, which I think seems like a wise move given some supply chain constraints. And looking at current liabilities, these were also up a bit over $1 billion to $27.8 billion, which leaves them a healthy current ratio of 1.18, which is a great sign to see. And this means that they have enough liquid assets on hand to pay off any liabilities that will be due within the next year. And when we look at total assets, they were up over $5 billion to $75.8 billion. But looking at total liabilities as well, these were up substantially to $75.6 billion, which, as we can see, gives them shareholder equity of only $237 million, which when we compare it to last year, it's down substantially, but last year they only had shareholder equity of around $2 billion as well, which again seems like a bit of a small number to me. When we look at debt, we can see they have about $39.3 billion of long-term debt, and then we add in $1.2 billion of long-term debt that's due within the next year, and then we add in about $500 million of short-term debt, which gives them a total debt of $41 billion, and that's up about $4.8 billion from how much debt they had this time last year. And when we look at the net debt, it looks even worse because their debt is up and their cash position is down. And that gives them a net debt of $39.8 billion right now. But that's actually up about $8.2 billion from this time last year, which is definitely not the best thing to see. When we look at the debt to equity ratio, because of how small shareholder equity is, that gives us a debt to equity ratio of 173, which is definitely very high and is not the best of signs. But they do have a lot of inventory on hand, which I think is skewing the picture a little bit. And overall, the balance sheet is fairly decent, but certainly not fantastic. And I think the biggest place they could make an improvement there is just paying down some debt just a little bit in the next few years. When we do look at the dividend, we can see that Home Depot currently yields about 2.5%, but they have been growing that dividend incredibly fast at an average rate of 17.5% over the past 5 years, and they still have a very safe payout ratio of just 45%. Now, I don't really expect them to continue growing the dividend, that quickly at, 15-20% in the future, but I really do think they can maintain, double-digit dividend growth for quite a while, in the 10 to 12 range, something like that. They really have only been growing their dividend at this point for 12 consecutive years, which isn't super awesome to see, but it is a fairly decent streak, and I think they will definitely continue that for many years into the future. And I think right now the dividend is very safe. And personally, I'm really excited for the growth potential of the dividend going forward. And starting to look at some valuation metrics, the PE ratio right now is currently around 26, as we can see, which is definitely above their long-term average of around 19. But when we look at their earnings over time, we get this gorgeous graph right here. And we can see that Home Depot has been growing their earnings super consistently and really quite quickly for a long time, which I really like to see. A small caveat here is that Home Depot has been very aggressive with share repurchases, so they've bought back close to 40% of outstanding shares over the past 12 years, but we can also see that earnings have grown from less than $2 around 2010 per share to over $10 per share right now, and that's more than a 5-fold increase. So the buybacks definitely weren't the major contributor to earnings growth over that time, even though they may have contributed some to that earnings growth. And when we compare Home Depot to their peers, the consumer cyclical sector has an average PE of 13, and the retail cyclical industry has an average of 11. So Home Depot definitely looks overvalued compared to their peers, and as we saw earlier, compared to themselves historically. But I think the thing that distinguishes Home Depot from their peers is their stellar earnings growth over that time period. But it also is important to keep in mind, like we were talking about earlier with the earnings, is that if we do see some macroeconomic changes over the next few years, like home prices decreasing or not growing as much, that could really affect Home Depot's earnings growth. So I think that is definitely important to keep in mind. Moving on now to the discounted cash flow model, I calculated a fair price of $273.89 for Home Depot stock, and this goes a buy price of $246.51 when a 10% margin of safety is applied. And currently Home Depot is trading around $310. So again, it seems a little bit overvalued right now, but certainly really not by all that much. Looking at a chart now as well, this right here is a 3-year chart. We can see the major thing I see, at least, is that they are still far above pre-pandemic highs, but they have certainly dropped a lot this past year. Looking a little bit closer in at the 1-year chart, we can see the stock has been below the 50-day moving average for most of the year, but recently in the July timeframe, the stock has moved up above that 50-day moving average, which is definitely a bullish sign. But just in the past few weeks, the stock was rejected at the 200-day moving average, as we can see here, which is, not the most bullish sign, I guess. And we can also see that the 50 and 200-day moving averages are converging a little bit. So if they kind of converge a little bit more and meet at some point, that could be a sign that there's some sort of move coming to the upside or the downside. We don't really know at this point, but I think which way it goes will really depend on where the overall market goes. And in my opinion, I definitely wouldn't be surprised if it moves down again pretty quickly. And now looking at Home Depot as a whole, they do have an incredibly strong customer base that's definitely going to continue buying lots of product from them as long as housing prices don't fall too much. And I really think that's one of the biggest macro factors that could affect Home Depot in the next few years is housing prices. If we do see those housing prices fall drastically, that could definitely hurt them in the short term, but it could also provide us with a better buying opportunity, and I really don't think it's going to hurt them that much in the long term. And like I've said, Home Depot definitely seems a bit overvalued right now. And I don't own any Home Depot in my dividend portfolio or any portfolio, but I did actually buy a share for my brother in his dividend portfolio. And I bought that at the end of June when the stock was pretty much near its bottom recently, around $265. So I was pretty happy with that. But I don't think I'd really be interested in adding any more unless the stock gets, below 275 again. Ideally, I'd like to see it below 250. I think that is a really attractive price. So let me know what you think of Home Depot down in the comments below and what you think its fair price is. I'd also be interested to hear anyone's thoughts on the housing market and how that might affect Home Depot in the short term or long term. And if you are interested in more companies in the Dow and want to hear my thoughts on them, consider checking out this video right up here that I made on Coca-Cola stock. Thanks for watching, and I'll see you all in the next one.